What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update is we had a really crazy day on the stock today. We saw some insane volatility. We started the day around $46.50, dropped all the way to as low as $43.77, but ended up closing the day at $46.84, down a little bit under 1%. I would call that a win, especially from what we are seeing in the broad market and how the overall big indexes are reacting to the news that has been coming out. And in addition to this, we are going to be touching on the ending day numbers for Ortex, the short interest in utilization. We're going to take another look and see what are the key levels on the option chain for AMC going into this next week. But the two main important things are going to be this massive $110 million record payout from the SEC due to one of their whistleblowers providing them with really solid information that they were able to use in one of their active cases. Now, the last thing that we're going to be touching on is another one of these major market events that we have coming up. A lot of corporate CEOs are essentially lobbying our government to raise the debt ceiling. They are worried about an overall financial catastrophe that could be easily avoided in their opinion. Now, we've talked about how the broad market is affecting AMC in total in the past, but I think this is something that we need to keep in mind. I don't want anybody to take this information lightly because this could not only have an effect on your AMC position, but if you're holding any other positions at the current time as well. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And the more people that we have staying up to date on accurate AMC information, the stronger our community becomes. And if you guys want to see more videos like this, make sure you hit that subscribe button. So there is one thing that I want to touch on before we head into the rest of this video, and that is going to be the price action that we saw leading up to that big start of the end of May, June run-up. So what we saw here, I briefly touched on this in the end of today's earlier video, but I do want to put this out there. If anybody can dig into this deeper, go right ahead and let me know. But we are seeing some very similar price action. We saw a pretty significant run up in AMC, a couple of days of red that are matching up similar to the numbers in terms of percentage that we are seeing now. We saw a down almost 10% day, pretty much a flat day, a little bit of another red day, which would line up with what we could potentially see tomorrow. But again, nothing is going to happen identical to what has happened before we had this really significant run up where we touched $77 a share in June. Now, a lot of people have been speculating that this is going to be the next really big leg up for AMC. Obviously, I want that to happen, but again, it is very hard to pinpoint an exact time and exact height that we are going to be able to get to. Now, coming over to Ortex right here, let's refresh this real quick to make sure we have the accurate info. Utilization, 88.11%. Again, it has fallen, which is a bit surprising, especially with the price action that we've seen over the last 2 days, but you have to think about there might be a little bit of a lag in how Ortex is reporting and getting its data. We have seen significant price run-ups in AMC over the last week, and it is entirely possible that some shares are getting returned. Now, short interest, 18.81%, still very, very high. The shorts have not covered their position, and again, they are continuously adding to these positions. Now, when we come over to Stonko Tracker real quick, 125,000 contracts in the money expiring at the end of this week, and at 50, we will get an additional 52,370 contracts. I would expect this number that we are seeing here at 50 and the total amount of out of the money contracts to increase as we go into tomorrow's trading day, because when we see these dips on AMC, a lot of people are going to be speculating that the dip is going to get bought up and they are going to play that with options. But again, I do want to put this out there that options are incredibly risky and you really should not be trading options, especially on AMC, if you don't fully know what you're doing, because the vast majority of options expire worthless and it is very easy to lose a lot of money very quickly. Now, let's get into this situation with this $110 million payout from the SEC. So when we come over to this article right here, we can see that the SEC whistleblower payouts top $1 billion total as securities watchdog announces near record award. The SEC on Wednesday said the total amount of payouts made to whistleblowers had topped $1 billion after the financial watchdog issued its second largest ever award to a person for flagging wrongdoing. Again, that's just essentially the title. The SEC said one person this week was paid a combined $110 million for information and assistance that led to successful enforcement actions by the SEC and other entities. About $40 million of that payout was connected to an SEC case, with the remainder from related actions by another unidentified agency. Another individual recently received $4 million in award money for whistleblowing, the SEC said, bringing the tally of such payouts this year to more than $500 million. Earlier this year, the third biggest whistleblower award for $50 million was issued. So the SEC, as we can see right here, does not disclose the identity of whistleblowers or information that could lead to revealing their identity. So we don't really have any idea what cases in what industry of the financial markets that these whistleblowers were working in, or what information that they have provided. But what this does show us is that the SEC is taking steps to investigate and is rewarding individuals for their contributions. But something to keep in mind here, exactly how these payouts are calculated, those payouts, which range in value from 10% to 30% of monetary sanctions imposed by the SEC that exceed $1 million, are funded by the sanctions, not by investors who were harmed. So what we're seeing here is that when the SEC is issuing these fines to these institutions, that the people who essentially brought this information are receiving a big chunk of that money. So when we take a look at this $110 million, most likely it was a $1 billion plus fine. That is very, very significant. Now, the next thing that we need to touch on is the situation surrounding the debt ceiling. We brought this up a bunch of times, but there has been some new developments. CEOs urge Congress to raise debt limit or risk avoidable crisis. The Business Roundtable on Wednesday sent a letter to congressional leaders warning that they could create an economic crisis if they fail to swiftly raise the debt limit. The lobbying group, which represents CEOs at some of the nation's largest companies, so we can see here that this is not an issue that large corporations are taking lightly. They know the implications of what could happen if the debt ceiling is not raised, and the U.S. either defaults on their debt, which I think is unlikely, but I think the likely outcome here is that the United States gets their credit rating downgraded, which decreases the value of a lot of equities. We do see market sell-off, and most of these CEOs are going to be publicly traded companies. They're going to be working at publicly traded companies, and they're going to lose a lot of money. Failure to lift the U.S. federal debt limit to meet U.S. obligations would produce an otherwise avoidable crisis and pose unacceptable risk to the nation's economic growth, job creation, and financial markets. Business Roundtable CEO Josh Bolten and Walmart CEO Doug McMillon wrote in a letter to congressional leaders. The executives wrote that continued inaction on the debt limit could cause an erosion of the nation's credit rating, which we have been saying for a while, that would saddle the federal government and the U.S. corporations with higher borrowing costs amid a deadly pandemic. The urgency comes as lawmakers refuse to come to an agreement on how to raise the debt limit. So we're seeing here that it's all wrapped into this infrastructure bill. There is a dynamic going on between the Republicans and the Democrats where if one thing gets approved, then they are not going to approve the other thing. This is really what it comes down to. It doesn't matter if you're on the left side or the right side of the political spectrum. What we're looking at here is policy. The policy here is going to determine what is going to happen to our financial markets. Now, if they can figure out a way to kick this debt ceiling can down the road, it will come up again eventually, but if they have the tools in order to basically make this situation work and not cause a giant financial crisis, which a lot of these really high up CEOs are worried about, then it's just going to be something else. We talked about in the video earlier today this Evergrande situation. We have inflation running higher than expected. Everybody is already over leveraged. So what we can see here is that there's a lot of catalysts for the overall market coming down. Now, we've gone over how this affects AMC in the past, so I don't really want to belabor that point, but it is bullish eventually. In short, what we are most likely going to see is that institutions that have long positions on AMC could potentially get margin called if they have bought their position with leverage, and that would cause AMC to start to come down. Now, the shorts will most likely see this and try to push AMC down as well. So we would see AMC start to have a pullback. But what we need to keep in mind is that a lot of the market is traded on algorithms. If the shorts are able to push AMC down to a certain point, wherever that may be, they would just start covering their shorts, but they would have to cover more short shares just starting at a lower price. So when you think about where the squeeze would start and how high it would go, in my opinion, it would not change how high the squeeze would be, but it would just change the starting point of when it would happen from. When we think back to what happened with Volkswagen, it happened in September and October of 2008. If you know what was happening around that time, that was the worst part of the market sell-off, and that was when Volkswagen went from 200 all the way up to over $1,000 a share. So I don't want anybody to really be that worried about a overall market sell-off with AMC and GameStop and any of these other short squeeze plays. Over the long term, and the initial move could scare people, but I still do think that even if we do have a market sell-off, we will eventually see that massive rip up in AMC by the shorts eventually covering their position. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I'm trading and which strategies I am using to trade them. So I hope you guys are having a great evening, and I'll see you guys in the next video.